Hi everyone, Gale here. Now let's talk about what the hell the future of house prices is going to look like. Is it inevitable that our children are going to have to wait till they're 50 before they can afford to buy a home? Or is Sir Keir Starmer and the Labour government going to be able to solve the Rubik's Cube that is the UK property market? Because despite Britain's biggest mortgage lender, Halifax, forecasting prices would drop up to 4% this year, for some reason, despite interest rates still remaining pretty high, house prices have so far risen 0.7% as of April. In fact, 1.1% year on year in April. So house prices haven't even dropped despite the expected fall. In fact, house prices have increased 0.6% in England, dropped 1.1% in Wales, increased 1.8% in Scotland, and stayed level in Northern Ireland. So what the hell are we supposed to believe here? Because it seems like over the last decade, all anyone's been able to achieve is to get every house price forecast under the sun wrong. In this video, I'm going to take you through the key things that will affect if house prices skyrocket or slow down. They are 1. Interest rates, 2. Inflation, 3. Demand from buyers, 4. Affordability of people's rent and mortgages, 5. Mortgage arrears and repossession rates, and finally 6. The supply of properties coming to the market. But why the hell should you even listen to me? Well, I've spent my life since 2012 building a UK-wide home buying company, estate agency, and my own personal property portfolio. So not only does that give me the inside scoop and access to information you probably don't have, but quite literally reading the market correctly is essential to mine and my clients' success. So let's get into it. Interest rates. Look, I know we're all fed up with interest rates being so high, and I'm not going to sit here and explain the obvious to you. We all know that high interest rates are bad because it makes borrowing money more expensive. And everyone expected over the last couple of years that if you turn that screw on interest rates from the lows of 0.1% in Jan 2021, which just seems mad that existed, to all of a sudden 5.25%, which I predict will drop to 5% in August, by the way, then you're going to have a huge portion of homeowners desperately trying to sell at the exact time you have a dramatic reduction in buyers being able to afford to buy. Simplistically, that is why all the forecasts kept talking about house prices falling or crashing, yet it just hasn't happened. It's like house prices are defying gravity somehow. So does that somehow mean high interest rates aren't affecting the property market? Well, no. Interest rates are definitely affecting the property market. It's just the brakes haven't been applied enough to see the car go into reverse backwards, to see prices work backwards. Instead, the brakes are just slowing down house prices. So ultimately, the future of house prices is going to be affected by interest rates, and the Bank of England are only going to drop interest rates when you know what hits 2% target. So that, my friends, is why we need to talk about inflation. And hooray, inflation is now down at 2% target as of May. Fantastic. Literally after 2 years of it being above 2%, the last time inflation was at 2% was July 2021, which is just shocking. So look, the logic right now is that as inflation is back to target, provided it doesn't go up for some odd reason, the Bank of England should slowly edge interest rates downwards. Now, you might be thinking, why didn't they reduce interest rates in June or July? The reason being is the Bank of England has never reduced interest rates leading up to an election or the month after an election since it was made independent in 1997. So look, if prices have already increased about 1% with high interest rates, what do you think will happen when interest rates edge down slightly? And how will that affect the demand from buyers? You would think that high interest rates earlier in the year would have dramatically impacted general demand from buyers. But as you can see here, the demand from buyers has really picked up this year, which is probably why prices didn't drop. But importantly, in April, they've increased about 16%. All this before the announcement that inflation had hit 2%. Now, I know demand is pushing ahead of 2023, but still behind 2022. But ultimately, all this is pre any sort of drop in interest rates. And my observation from my own nationwide estate agency is buyers are taking action now to get ahead of the rush of buyer activity as interest rates inevitably start to drop slightly through the year. But we all know demand is one side of the equation. Ultimately, the supply of property is going to have a heavy effect on if prices slow or increase. So right now, what is happening to the affordability of people's rent and mortgages? Now, I think this is where we start to see the start of a less rosy picture, because we can see clear as day that over the last couple of years that there is a growing number of people that are reporting it very or somewhat difficult to afford not just their mortgage but their rent. It's actually increased more recently, and you can see the overall trend, that black dotted line has clearly been increasing overall. The natural concern is that as these numbers rise, repossessions begin to rise. So what are mortgage arrears and repossession rates at the moment? It's sadly going to come to no surprise based on the last section that mortgage arrears is starting to increase. It just seems unrealistic to expect anything but these figures to keep heading upwards until interest rates begin to drop and ease the pressure on so many households. Sadly, the byproduct of rising mortgage arrears is ultimately going to lead to high repossession rates. But as you can see here, repossession rates, although rising a little, are generally staying quite stagnant. They're not rising in any way like the previous two graphs, which is in a way quite reassuring. But the main thing to bear in mind is when you begin falling behind on your mortgage, there is generally quite a long, large lag between being in arrears to eventually being repossessed. You'd usually have to be in at least 3 months of arrears before repossession proceedings would even begin. And then typically repossession proceedings can take anywhere from 6 to 12 months. So given the mortgage arrears are only starting to climb about 9 to 12 months ago, we're probably going to see a rise in repossessions really over the next 6 to 12 months. So how is this all going to affect the supply of properties coming to the market? So look, we know that demand for property is increasing, and I'm hoping you all agree that if interest rates drop a little, then demand is probably likely to increase a little more. Comment if you disagree. But another key part to the equation is the supply of property coming to the market. Is mortgage arrears increasing, leading to a higher supply of properties coming to the market? Well, sadly, yes, it looks that way. The volume is looking likely to hit a new high soon. So in one sense, if we know demand is likely to increase, then the fact supply is increasing may help balance things out a little. But of course, the circumstances of a big proportion of that supply of properties coming to the market is obviously quite sad. We're seeing a bigger and bigger proportion of sellers coming to market their properties through us that bought a house maybe 2, 3, 4 years ago and are purely having to sell now because their new mortgage rates are just too high. Again, if we look at the average number of properties available on the market per agent, you can see the total available properties is coming close to hitting record levels over the last couple of years. The overall trend is clearly upwards. So clearly this shows that although the volume of buyers is increasing and the volume of property coming to the market is increasing, in general there is more supply entering the market than demand. This will be a big reason why house prices haven't increased as high as they ordinarily would have if interest rates were lower. But with everything we've discussed in this video, what do you think the future of house prices is? Comment below, don't be shy, start a debate. There is one thing that could change everything, however, And that is Sir Keir Starmer's pledge to build 1.5 million homes in the next 5 years. Essentially, he's reinstating the 300,000 new homes a year government target that's been around in the past, which, as you can see, every government has fallen drastically short of this century. Because in reality, we all know we're not building enough homes, and until that is solved, prices are going to keep rising beyond reach. Do you think the Prime Minister will keep his promise? Comment yes or no below. Let's see what you all think. And before you head off, please subscribe if you want to see more of me, or at the very least, like this video because it keeps me motivated to keep making them for you. I'll see you in my next video up here.